In this video, we're going to talk about my student Mohamed, how he turned a couple of $100s into $30,000. Now, let me be clear. We've talked about Mohamed multiple times this year. Number one on the leaderboards for his funded company, $10,000 withdrawals. This is just the little cherry on top. He's giving you a gift here. I'm going to do 3 things that he did in order to achieve the results that you've seen from him this year. And honestly, things that many of my students and community members have done in order to improve their trading. Number 3 is going to be the most important one out of all of them. Let's get into it.
Okay, so step 1, the first thing that he had to understand. Now, this is going to be something that I teach basically every single trader out there. And some things sound simple, but executing is very different than just knowing. Most people in the trading space or in any skill-based arena, they usually get to the point of being able to define something, to make it sound good, right? To parrot, right? If someone states something, they can repeat the same thing. But we see this all the time in society. We see this everywhere we go, that there are plenty of people that once you put them to task, or once they have to use their noggin a little bit to make something happen, it doesn't work out. People don't really get to the point of high-level skill because it requires something. It requires time and consistent micro steps. So step 1 is going to be something that you need to realize from day number 1, that when you create strategy in this space, it's going to be 1, cater to you a little bit. So it's always going to be slightly different than the next person, what you prefer in the market, what you're looking for in the market, what you can tolerate in the market. If you're learning how to swing trade, right, from someone and they give you like a swing trading 101 masterclass, and then they give you 4 steps towards your next swing trade, but your tolerance to swing trade is not even close. Like, you can't allow the market to move 20 pips without starting to break a sweat. You can't get out of New York session, an intraday session, without being totally nervous and staring at the screen for the next 8 hours. You're just not in a position to swing trade. So what I teach my students is we're going to learn how the market moves, what you should be looking for, what prime setups look like, what maybe like a B+, A- rated setup looks like. But more importantly, we're going to learn what you should be looking for in order to build your own personal strategy. See, when you're learning how to trade, or when you're trading in general, you should know where you want to work from, aka points of interest. That's 1. You should also know what's it going to take for me to start the risk process. This is key. What's it going to take in order for me to even start giving risk on this screen, on this chart? If you don't have that, if you don't even have an understanding of how that should happen, this explains why you feel like in 1 week you're doing great, the next week you don't know anything. 1 week I finally got this, the next week I don't know anything. So step 1 is figure out your first setup. That's step 1. I've had to do this with people who are even in the industry 6 years, 7 years, 10 years. They've lost 6 figures in the market, and they've never been sat down to really understand what they should be doing from moment 1. They just, basically, most people, this is the way they go about it. They get a price. They pick a price for whatever random reason on this Monday, and then another random reason on a Tuesday, and another random reason on a Wednesday. And then when they see that price, they go full risk with their price. This is never going to work. Could you get a couple of lucky moments? Of course. With high risk and good volatility, sometimes the market's going to carry you to somewhere where you never thought it was going to happen. But most of the time, they're going to lose that too, and we'll talk about that later. So step 1, find a setup. I'm going to give you 2 setups that Mo used in order to start seeing better results. I'm going to give you 2 points, right? I'm not going to go through a whole strategy. That doesn't make sense right now. I'm going to give you 2 points, 2 things to look for, and this is where it should begin. Point number 1 for this first piece is when you see the market doing something, trust that it's going to continue doing that. Now, for most people, they're going to go to a lower frame and try to pull this off there. I would say that if you're someone who has absolutely no tolerance, no patience, it's insane to ask you to be like on a daily or a weekly, which is where I prefer. I'm a swing trader. I'm a trend trader. My trades last sometimes quarters, And I also know how to intraday trade. I've been around this for a long time. So I'm known as sort of a hybrid. It's the little thing that's special about me. Most people they just like one thing. I like to work the trend, and inside of the trend, I like to find those intraday moves. But the intraday is not important to me. It's about developing that long-term trend. And as we go, I will find that intraday activity to satiate that part of most people's desired trading experience. But that does mean something. I don't really mess around with the 5-minute chart, a minute chart, little micro moves that could easily be wiped out by noise, because I know that fundamentally on the news side of things, it's too erratic to go about it. That's how I feel about it. It works for us. Remember, this is my opinion. There's going to be plenty of conflicting opinions from people who are also profitable, from people who also have done what Mo have done. Okay? You got to find what works for you. But it's my opinion, after teaching people for the last decade, that you should understand both sides of the coin before you start making decisions. Before you start saying that doesn't work, this doesn't work, should you not know if it works for you? Should you not understand how the trends work? Should you not understand how fundamentals inflict on trend? Should you not understand what noise looks like and how structural market mechanics, how that's supposed to develop in order to build out a trade long term? I believe you should understand it all, the development of a trade. So let's start here with something that was specific to Mo and specific to, I'm going to say, to a lot of people. Let's ignore the trend frames like daily, weekly, a 4-hour. Let's go hourly. If I see the market doing something, I'm going to not battle that. So let's look for examples of that. What I see a lot of people doing when I first get a one-on-one student, or I get someone in the community who's been a total disaster, or someone's expressing to me that they don't understand why things aren't going well for them. They know this, they know that. It's always basics that I just don't get why this person is doing the things that they're doing if they know so much, or they believe they know so much. So let's look at it. We got this first trend here. That's a trend. Why it happened, how it happened, we're going to leave that up to it doesn't matter right now. We're just learning something very specific. In Mo's screenshots, he was working gold, but we're going to use Euro USD. If I see the market climbing the ladder, aka creating a resistance and then creating a support, the significance of it, I have a separate concept for that. But this right here is a normal market structure situation. What I see a lot of people doing is, depending on when they look at the chart, that's how they'll look at their bias. What I mean by that is, let's say, for example, they saw the chart climbing 74 pips, and they'll see that there's some space to the next resistance. They will take that buy. They will take that buy even though not too long ago, right? So this is what? An hourly chart. That's about 29, 30 hours of structure. The market literally showed you a low. So when you take a buy here, when you take a buy or you take a sell, you have to ask yourself, what's the potential of this trade? If I take a buy here, the potential of this trade is about 33 pips to the next resistance. That has to be your honest assessment, your honest target. You can't go, well, I think it's going to get up here. Why? And how fast? And can you actually remain in this trade while living your life for the next 3-4 days in order to see it get up there? So what I see a lot of people doing is like basically glorified guessing. This buy only makes sense when the market finally creates support. And the reason is it's showing you that we are that bullish. It took that little micro resistance and then eventually created that buy. A person like Mohamed, a person like Mo would take the buy from this position. Most of my students would take the buy after the development of structure. There's a reason to actually buy. That is part of this conversation. Most people, they're guessing all the time. That's what they're doing. They're not allowing the market to establish because they're waiting. They're worried about whether or not the market's going to leave without them. That can't exist in a trading plan. That can't exist if you know what you like in the market. If you've developed strategy, then you have to wait for those things to happen. And even if the chart leaves without you, it is what it is. That's part of the risk. That's business. That's investing. That's trading. That's everything. Sometimes the timing wasn't aligned, but there will always be tomorrow. So as far as the buying, the market has already developed this buyer move. It's already moved 80 pips on this Euro USD asset, and it's created you one little sell. Now, where does the buy make sense? Once the market establishes structure. That's it. That's the best position for this chart to actually make sense on the buy side when it's already left your price. Now, what I see most people doing is this. They look at the chart, they wake up in the morning, they wipe the crust out of their eyes, they take their morning pee, and they basically haven't even cleaned up yet, flushed the toilet, and they're already on their phone looking to take a trade. Now, for most people, it's dependent on on how they wake up and whether or not they're actually trying here. Because here's what I notice, that if the market was creating this resistance for 3-4 hours, that person's going to sell. The average trader is going to sell there. The loser, the person who loses a lot, is going to sell there because they're going to say to themselves, well, look, it's stalling out. The market was really one-sided. The market doesn't like, in this world nowadays, inefficiencies, right? The unstructured movement. It's going to look for liquidity. It's going to find a Fibonacci. It's going to find a moving average. There's so many strategies out there that look for this. But basically, they will rationalize why this take makes sense. Now, the answer is this. Why would you try to sell without any real proof that there's a sell situation here? Where's the proof? This right here is a stall out. That's it. It's resisting. That's supposed to happen. The market is not one-sided. It's going to have retracement. And if you think about it, if you wanted to sell, if you think that the market doesn't like unstructured movement, what about the fact that it could easily undo this move on screen and get us all the way back up here just to start it again? That can happen. But because you're so focused on this one little area right here, you are rationalizing the fastest possible route to your next trade, and that is a major problem. That is a problem for most traders. You're putting yourself in a position where I'm just going to read the information in front of me without any critical thinking, and I'm just going to throw this entry in here and hope that we get at least a slight retracement in order for me to get a winning trade. That is not a route towards profitability. That is not something you would do out there in the investment world, in any kind of skill-based thing. You would try to run through a mental checklist of everything that I need in order to hand this person money, in order for me to get back money, in order to buy this home, in order for me to have some upside on this home, in order for me to buy these, Pokemon cards, in order for me to get something back on these Pokemon cards, some sort of upside. Think about it that way. When you sell here, what are you really saying? That you think the market's going to get back down here? Why? You got to have at least 3 reasons that support your sell. So maybe it's daily closures. Maybe it's, the market finally broke structure, right? Maybe you find this little support line right here, and then you start working it that way. The market breaks below, the market comes back within, the market develops resistance, and then you sell. But this right here is just not enough. But it's the most common thing because to most human beings, 4 hours, 5 hours feels like a lot. To the chart, it could do this for the next 3 days and not move at all. That's trading. It could move in one smooth move on a fundamental tweet from Donald Trump, or it can do absolutely nothing for 2 days, especially a major like Euro USD. My point is, if I see the market going one-sided, and then I see the market establishing support, and this is happening now on the 10th, and then on the 11th, and we're still here, I can definitely take a trade, and more importantly, accept the loss if it was to happen, because at least there was something on my side that supported this, right? The market broke resistance, the market created support, the market was there for more than 1 day, the market found a good support line on session, and we took off for 50 pips. And this continues on, right? So there's many little moments where the market finds resistance, finds support, finds resistance, finds support. Now, I'm not telling you take every moment. I'm telling you that in this particular move of 130 pips, there was more than one moment where the market looked like it wanted to go bearish and then died out. 19 pips. That's not enough in our community to give a shit about, by the way. 19 pips. For some people, they're monstrously profitable and stuff like this. But even them, I think they would tell you, take the buy. Because at least the buy has the potential to fly. It has the potential to carry towards a 4-hour target, an 8-hour target, a daily target, a weekly target. You're on trend. That cliche statement, the trend is your friend. That's what you're doing there. So what's it going to take for me to sell? you should see some sort of structural break. These stupid lines that people draw on the screen, the boxes, the moving averages, they are about confirmation and confluence. But what I see most people doing is they'll draw all this stuff, but they're just drawing it to push themselves as fast as possible, again, towards their entry. So, number one, it's about having actual data that supports your bias. That's not going to happen based off of this one little piece. You need more than one. How many pieces? 3. So this first portion is about, yes, the trend is your friend. I wanted to take this first step, this first tip, this first portion, and turn it into A and B, 1A and 1B. 1A is if I see the chart moving in one direction, I don't try to find these little micro moments to try to find the retracement and rationalize why I should do this. I should wait for structural breaks. I should wait for the market to retrace back into these prices. I should wait for confluences. The question's always going to be how many. For most beginners, I'll say just think in the terms of 3. That's a very cliche thing, but 3 makes sense. 3 things. What are the 3 things? 1, market closures. Even if it's on an hourly, start somewhere. That's something else. After teaching people for 10 years, let's not make believe like we're going to be perfect right now. Let's start somewhere. Let's build data. Let's build data so that off of data, you're going to notice that to be a theme with me. Off of data, we can create changes. In business, in life, in trading, in investing, you don't just make choices based off of how you feel today. You're never going to be able to thrive like that. You need something that's consistent all the time in order for you to make real decisions off of that data. So we begin there. If I'm seeing the market go bullish, I'm going to wait for the buy. And if the buy doesn't develop in a way that I think is good, so 3 points, for example, resistance became support. That's point 1. Point 2, some daily closures. Point 3, we're already freaking bullish. That's good enough for me right now for any beginner. It's better than I wake up in the morning, take my morning pee, wipe the crust off of my eye, open the chart. Oh, look, it's resisting. Let me take a sell. And I'm selling and I'm selling. And maybe even the sell's already, that's something else. And we're going to talk about that in step 2. The sell's already developing and then I just take the sell. And then I get just ripped apart by this thing. And it even gave me a chance to get out and I didn't do it because I'm so intent on this sell. That happens all the time. I mean, I see it all the time. So step 1, I found the reason to even pay attention, which is resistance became support. Step 2, I'm running with the trend. It created support over multiple days. Nice. Step 3, running with the trend, created support over multiple days, resistance over support, and good time. I probably gave you 4 right there. That's it. It's a good time for Euro USD 11 GMT. There, I developed. Now I'm going to try to run every trade the same way. Resistance becomes support. I find some sort of closure. We're already developing in this way. Good hours. Look, Euro USD, good hours. Bang, there's my next trade. And then it flies. Good one. It happens again. Resistance becomes support. Now it's 8 GMT, 9 GMT, 10 GMT. That's London. Boop. There we go. I just won 3 trades in a row. I barely know anything, but all I really did is run with the trend. On the opposite side, let's say I wake up in the morning, right? It's now Thursday morning and I've had a good week and I'm like, damn, I've been running the buy, but now I don't know. Let's look for that resistance becomes support, right? Let's look for something that's familiar to us. Keep doing that. I got it here in the notes, right here. Keep doing that. Keep running the same trades in the same way because, like we'll talk about later, once you get enough data, you can make real decisions on what your strategic approach should be. How can you be in a flow state when there's no consistency? If every day is just let's see how I feel today. If today I'm in a bad mood, I might just take a trade out of full revenge. If today I'm in a good mood, I might take a trade thinking I know everything. They're both wrong. There should be no emotion on this. It should just be, what do I normally do? And you run the numbers that way. So we find some resistance, wipe the crust out of our eyes, take our morning pee, pull out our phone. Disgusting. You're using your phone above the toilet. You're like looking at your phone. You're like, oh, this looks pretty good, but I've been buying. So you know what I'm going to do? Gustavo, I watched that video from Gustavo, so I'm going to do something smart. I'm going to wait. So I see that the market has created me a little support, a little resistance here, a little support. I might take that trade. That's 20 pips. And then the market starts flipping over. And then we go above again, and now again, my entry that was negative is now up 26 pips. But then the market goes below, and then I start to notice that the market is starting to shift on the bearish side. Something is happening here. Oh no, my trade, I'm starting to lose. Oh no, it's leaving. Oh no, I'm starting to see support, resistance. Any trader that's profitable that I've taught, they know this like the back of their hand. They don't draw it all. They see it with their eyes. That's how they make their choices. Should I cut this trade? Should I stay with this trade? Should I add more risk on this running trend, which is one of the most popular questions that I personally get. Because those numbers that you see, they're not coming from singular moments. They're coming from trend trading. They're coming from what I just explained earlier in the video. The person's running a trend long term, but as the trend is developing day after day, week after week, they're placing entries within that trend. So if you see this happening, don't fight this. And this does require practice. And I'm not saying mark up your chart in this way. I'm saying this is how you create decisions. You can't get away with, oh, I hope it could just go right here and then squeak out a trade. Are you some sort of homeless person opening the door at 7-Eleven or your local gas station asking for $1? Why are you accepting scraps? Why are you accepting junk in the market? You make the choice where you participate on these charts. You make the choices what prices you define. You make the choices at what alerts you're going to work. Those are your choices. You control risk, you control where, you control when, you control how. But by you waking up in the morning, wiping the crust out of your eyes and taking your morning pee for the ladies or even some of the more feminine gentlemen, sitting down on the toilet. I know somebody told me there's a prostate reason why people do that. Whatever. You should never take a trade impulsively. There's no reason to do that. On this screen right now, on Euro USD, which is not known for its extreme movement, I just showed you like 5 to 6 very simple entries for 20 to 30 pips, especially because that's like a magic number for most people. So I'm not doing that by accident. So this is 1A and 1B. Confluences, similar entries, seeing actual development of trades. And when you can define something, then execute that trade. Don't react. So don't react to things like, oh my God, it's dropping without me. And then you just like take a sell. Because yes, you may win, but you don't know ultimately how this is going to play out. Because look at the beauty of this particular Euro USD moment. All the market really did here is develop this again. So let's look at it. You see how we hit a low, we were already late, and we had to develop these buys as time went on. If the person tried to sell here and they weren't really accurate with their sells, they found themselves in drawdown pretty quickly. Eventually, they're going to lose. So they need to be TPing, they need to be managing, they need to be sharp, because if they're too low, they're not going to have enough space to take themselves out and profit or even take the trade out in general. But let's find the same thing later, all right? What did it do later on a larger scale? Same thing. This is how you develop skill. I could do this on any chart. Any chart. I'm not going to... Well, I can. Let me see. Let's go into the USD. This is from the community. The little red check marks is places where we've been in the community. You'll notice that there's a lot of activity from similar positions. There's a lot of activity from similar positions. A lot of activity from similar positions. The markups have their own rhyme and reason. We're not going to get into that. But you have to find consistency. If I take you to the group chat. Let's look at a GJ cell. There's no signals in here. There's just updating and kind of like a live journal style, right? He took the same cell. This is the Fry Daddy on silver, so different conversation. Look, $1,600 day for him. He took the same cell, and I took the same cell. I didn't tell them to do that. I just took the cell. That was it. I updated them. I told them that's what I was looking for. They know how I trade, and they took the sells. That's it. They are their own traders. So for Euro USD in this example, what I want you to learn is if it doesn't have data, you don't do it. Look at the buy. Look how easy that was. Look at how it becomes painfully obvious in these two major trades right here that the buy is what you should be doing. This has everything we just talked about. It has the resistance creation. It has a support line creation. It has a multi-day closure. It has good time. That's 15 GMT for Euro, 13 GMT for Euro USD. This one right here has the resistance creation. It has multi-day support. And of course, New York session for another trade of 80 pips. You can do this. You're not going to get 20 trades a day in this way, but you're going to get trackable data that over time is going to give you better trades, more control, and a real understanding as to whether or not you need to tweak something, you're getting better, or you're just the same shitty trader who got lucky and was in a lucky run. Next, let's go to step 2. All right, step 2. Now, for step 2, we're not going to look at the screen. We're going to talk. We need to talk. Now, I've been teaching people for 10 years. 11 years at the end of this year. No, in February, it will be 11 years. And the community style, like you just saw, that's been 8 years now. On Black Friday, it was 8 years. What social media has destroyed people. I am on social media. You probably watched this video off of social media. I have Instagram. So let me show you something here. So I have Instagram and social media just like anybody else, right? I have to build the brand. So years ago, I decided I'm going to build this brand based off student testimonials. That was the goal. We've done that. You go through my page and 9 out of 10 of the posts are going to be student testimonials, student related, some milestone moment. You know, we've had people on the leaderboards for funded companies. We've had these major monstrous testimonials, 6 figures. This year, we've had like 3 or 4 different 6-figure testimonials. And it's just these life-changing, that's my cell phone. Oh. And we've had these life-changing moments for different people. I don't do that so people can compare. I do that so people can believe and understand that this is real, but it's not easy and it's going to require a crap ton of work. And are you willing to even have a chance? Are you willing to work hard enough to even have a chance to get there? If not, don't even bother. Now, for most people, what I tell them is social media is bad. It's bad because if you have $100 day, you look at it as it's not a $100,000 day like this person. If you have a 10% gain on your account, you go, wow, it should have been $1 million, or how come I don't have the Lambo, or how come I'm not on the leaderboard? So when I make my content, it's about belief, and it's also about celebrating people's wins, because in this world, once we get out of like high school, maybe college if we played some athletics, we're on our own and people don't celebrate us. So I wanted to create a community and an environment where there's people just like you. They've been in this journey, or they're on this journey, or they're in an earlier part of this journey. And it's good to celebrate those micro milestones. It's good to celebrate those major milestones. It's good for you to be around people who are happy for you, genuinely happy for you, because they're trying to do the same thing. And every single time that somebody does well, it's just one more little piece in the back of their mind telling them, stick to the plan, do things right, don't gamble, don't over leverage, don't do dumb shit. Don't turn this into something it doesn't have to be. So social media to me is a major problem for people because they start the comparison game. They'll take $1,000. Let's get this off screen. They'll take $1,000 and they'll turn it into $2,500. And then they'll say, oh no, but I just saw a $10,000 testimonial. Let me get it there. And then they'll lose everything. My argument is always the same. If you take $1,000 and you turn it into $2,000, $2,500, you should be withdrawing. How much? I would say all of it, all the profit. Place yourself back in the starting point, especially if you've never done this before. We call this match your check. Simple concept. And the reason that I get so many withdrawal testimonials is because I've taught them to understand time and money. Most people can understand that you work about 40 to 50 hours a week. Most people are not happy, especially if they're American. They're not happy with how much they're making. They're underwater or like right on the line. They got credit debt. They got this and that. You should be matching your check because all you really did to make that $1,000, $1,500, $500 this week off $1,000 account is one, create 50% gains, 100% gains in your account, which is a major number. It gets disrespected if you think about it in percentages. Where else are you going to take $1,000 and turn it into $1,000 of profit in a week off of a highly volatile market? Or maybe you over leveraged and got lucky. Let's be honest with ourselves. Let's speak some truth here. Why aren't you withdrawing? You work 40 to 50 hours for probably something similar, but here you just press the button. That's what you did. You pressed a button and you made money. You used your brain, used very little physical energy. You didn't go in traffic. You didn't deal with people. You didn't do any of that. This is free profit. And in my mind, it's one step closer for you to have some breathing room, for you to be able to do something without worrying about the price, for you to believe it even more that this is what you should be sticking to instead of you trying to gamble and get lucky and, I don't know, go out there and lie and scheme and scam. In my mind, I think that social media puts people's expectations to a level that is just insane. They believe they should be here. They believe they should be doing this. And I'm not saying don't dream big. I'm saying that everything comes with time. But wouldn't you rather put some emotional cushioning on your account? Wouldn't you rather, I don't know, the people who support and love you, they're watching you trade, they're watching you do, nothing's happening. You finally get that first withdrawal. It's a different vibe. It's a different energy. And it is a subconscious play as well. It's a bit of a trick that you're playing on your mind, that you're finally doing well. This is where you're supposed to be. This is what's supposed to happen. It makes it easier for you to be more professional about your approach. Social media has ruined people because they have no patience. They have no process. They just want to get to the goal because they see somebody else's highly edited lifestyle on screen. So for your social media, what I would suggest is if you use it to make yourself feel like crap, then don't use it. Or limit the amount of time that you are on social media. Step 1, find an approach that makes sense. I gave you one, a simple one for any person. Mohamed follows that exact approach. Now it's more advanced, but it began there for him. Consistent data, consistent approach. 1, 2, get off social media so that you can stop ripping yourself apart subconsciously, so that you can stop comparing yourself to other people. You don't even know if the stuff you're seeing online is real. That doesn't stop you from feeling some sort of way about it, and usually it's negative. Social media is good for information, connecting with people, right? Having access to things you would have never had access to before, but it's horrible for building a person's personal self-belief and their self-confidence, their self-esteem. I think it just destroys that. Even for adults, which is a little sad, but it's the truth. I deal with people all the time. I hear people's stories all the time. I ask them, what do you think's going to happen here? What are your goals? What are your expectations? The answers are never good. They're usually bad. They're usually insane. Oh, I just want to turn my $1,000 to $100,000. I saw this person do it. Okay. Have you been trying to do that? Yeah, for the last 5 years, I've been trying to do that. How much money have you lost? $100,000? Holy crap. And no one told you to calm down? No, he told me to deposit this much. That it's easier for me to make money the more I deposit. A different conversation, but you got played, okay? And that's that. That's 1. That's 2. Let's get into the last and final piece of this video. The last piece to this is an obvious one, and you know we were going to go here. It's joining the Zaps way. Now, you don't have to join me. You don't have to join this community, but I did want to break it down. In this community, I do daily updating. I do strategizing webinars. I put out calendars so people know when the webinars are going to be. I do updates every single day. I do monthly notes. I do a bunch of different things, testimonials. I do everything. I've been doing this now for 8 years. 8 years of doing this. You can ask anyone. I don't miss a beat. I'm not somebody who's like struggling to do this. I like doing these things. I like building community. I know what it's like when you're trying to just trade. You want to do something. You're not even in a rush, but you just can't find good information. I know how annoying it is to get sold something new every single day. This has been what I've been air quotes selling now for the last 8 years, a community. We have beginner courses, advanced courses. We have modules, master classes. I've never been accused of not having any content or not having enough energy in the community. Never. If anything, people feel a little overwhelmed because they're so used to getting a 10-hour course and the person gives it to them, charges them thousands of dollars, and then walks away. So here's my invitation to you. If you go straight to the website, ZapzTrading.com, it's going to say it's $200 a month. That's what it's going to say. But if you reach out to me directly on Instagram, or you reach out to me directly on Telegram at Gustavo Zaps or Instagram at Gustavo Zaps, I'm going to give you an immediate discount into the community. But we have to talk. And here's why. Because not everyone gets in. There are people that I tell them, I don't think you should be spending more money. I don't think this is for you. I don't think you have the right mentality. You might be too young. You might be too dumb. You might be too, greedy. There might be a false sense of what this is. You may think this is like a game where you can just kind of throw money into it and eventually make money. This is a skill, right? This requires understanding. These people here work their ass off to get to where they're at. Every testimonial, they had to work to get to where they're at. This Bitcoin buy right here, that's a Bitcoin buy. Bitcoin's been dropping strong. Right now, Bitcoin is probably at like 93. Where is it at? Let me see. Oops, wrong chart. Where are we at? 93.6, right? That buy, that gentleman just caught 9,000 pips. Let's look at it again. Look at this. That's a beautiful buy. He's somewhere in the ballpark of like 8,000 to 9,000 pips. That's a beautiful buy. What did he say? I asked Gustavo yesterday about this Bitcoin trade because it was his third re-entry. Remember we just said earlier in the video, consistency. You got to teach him consistency. We call it rinse and repeat, right? You got to have models here that you approach over and over. It doesn't mean this is the only thing you know how to do. It means that there's a tool belt here. There's a weapons list in your mind, and you pick at those weapons depending on the situation. I can't treat a highly volatile market the same way I treat a slower market. We can't be in the middle of rate cuts and the aftermath of rate cuts and treat that market the same way we would a Monday morning. So right here, he says his advice was to take partials and leave some risk on the table, and now it turned into a beautiful trade. We call it partial protect and let it fly. And he let it fly. There are other trades, right? So let's look at another one. This one is gold again, right? We got more trades here. GJ, that's me. Let me see. There was another Bitcoin buy that I remember. Where are we at here? Right here. He found the low of Bitcoin as well. And he let that one fly as well. Now the risk is low, but we're talking 10,000 pips. We're talking a major move. This person withdrew. That's a nice GU sell. You're going to find a lot of consistency in this community with everyone's markups and the way they approach it and the way they talk about it because they're being educated. Have you ever been educated? Have you ever sat down and actually learned how to do this? Have you ever seen example after example of something being done the same way over years' time? Because we have that. We have something called an immersion course. It's the advanced course. That is hours and hours and hours of very similar content throughout 6-7 years so that you don't have to spend 6-7 years to learn and gain 6 to 7 years of experience. You can spend 30 hours. Yes, it's a lot of hours. Which one would you rather choose? We have immersion courses. We have moduled courses, short form to get a person to understand something quickly, right? We have master classes. We do daily updating. We do strategizing webinars. That is how people learn. It does require a certain amount of energy from me, but I like it. And I'm good at it, obviously. Okay? So that's it. That's the video. You were just given 3 different things to add to your trading repertoire. One of them you don't have to do, which is join the community. But hey, if you want to have a chat about it, you can reach out to me directly. The other 2, those are non-negotiable. You have to build data. You have to build consistency. You have to find an approach that works. You have to do these things. You can't get away with just kind of throwing the entries in there and hoping for the best. That's not going to work. Build data. Use a simple model like the one I gave you. Start there. A 3-step process. Start there. If you could get it to 5 or 6, that's even better. If you can use a higher frame, that's even better. If you can find confluence on a top-down analysis, everyone knows that's even better. If you can have proper risk management on this, even better. If you can learn to withdraw, even better. If you can stop comparing yourself on social media and just run your trades for what they are, not what you wish them to be, because this $1,000 is not enough for you, it should be $5. This $500 is not enough for you, it should be $1,000. Even though the account is $200, you just made $500 this week and you're still not happy. You don't understand the percentage gains here. That's self-sabotage. That's a way to keep you in the negative mindset the whole way through and eventually quit. Maybe now you'll start doing better. Hopefully I hear from you soon. As always, happy trading.